Sensex and Nifty end with minor gains, close higher for the fourth consecutive session, driven up by auto companies and private banks.
Tech Mahindra beats expectations in the third quarter. Revenue, margins and profits all beat street estimates. Stock ends in the green.
Banks lead the charge for the bulls. PNB ends in the green after a strong third quarter. The bank returns to the black after 3 quarters of losses.
Midcap index underperforms, led by Jubilant Foodworks. Company considers royalty payment to its promoter group for the use of the Jubilant brand. Stock ends the day deep in losses.
ACC ends the day in the red after a weak third quarter. Profits miss expectation. Revenue and margins are, however, a beat. Tata Global 2 is a cold brew after Q3 earnings. Net profit, EBITDA and margins all dip. Well, those were the top 5 headlines from Dalal Street on a day when the bulls, as the headlines told you, for the 4th straight day, kept the Nifty in the green. This is the show where we tell you everything that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair.
Lata, hi. Positive close, but again, the broader market picture did not improve. Advanced decline looking pretty poor. Once again. Over the next 30 minutes, we will talk about what happened during the 6 hours of trading, and we'll tell you what mattered and why. We're joining us to answer your questions are Mayuresh Joshi on the fundamentals and Mitesh Thakkar on the charts. Thanks very much, Mayuresh, Mitesh, for joining us. But let's, before we get to the Q&A part of the show, take a quick look at what happened in the day. Just recapping, the broader themes and stocks. Lata.
Well, the market started in a bit of a vacuum because Asian markets are closed for the lunar New Year's, which is celebrated actually practically across all Asian countries, barring Nikkei, of course. Nikkei traded a little in the red, but the rest of the developed market was like in a bright paint of green. Not just Nasdaq and the Wall Street indices, but European indices doing extremely well because of good earnings. So the global backdrop, you couldn't complain too much, except that crude is almost 62, $90, 90 cents plus 90 cents and change for a better part of the day. Again, a sign that growth is not all that bad. But within India, it is quite clearly a pressure that is coming from the interest rate market, from the debt market. Yields have been under pressure, or they are rising because of the big fiscal borrowing program that was announced in the budget. That and other things, of course, the long lean patch is hurting a lot of leveraged companies, as we know. And we will, Prashant and perhaps Anisha will join us to explain this a little more. So many leveraged groups, Z, DHFL, Adani Group, Arcom Group, so many of them in the past several days have been under pressure, and they continue to take the broader markets lower. But I would still hold a leaf for the bulls today. Not only, as you said, it's the 4th straight day that the Nifty is ending in the green. Yeah. Today, 60% of the Nifty 50 were in the green. Yeah. So it just kind of broadened out beyond your yesterday's Rithik stocks.
Absolutely. And advanced decline, was 2:1 in favor of declines, but it was worse yesterday. Yes. 3.5 to 1. Okay, stocks. Let's just take a look at what really happened. So, let's start with Nifty gainers, because there were more gainers than losers, at least on the Nifty. Z bounced, you got to call that a bounce, was up 5% by close. Titan was up 4%. Dr. Reddy's was up 3%. And then there was a long list of auto stocks. Hero, Bajaj, Mahindra and Mahindra, Maruti, Aisha, all Nifty names, all ending pretty strongly higher. IndusInd Bank and Axis were the private sector lenders, which did well on the index. Losers on the Nifty, Coal India was down, Tata Steel and commodities generally did not have a good day. Tata Motors was lower, ONGC, Yes Bank continues. There is consistent, and I would reckon this is consistent cash fund selling and probably foreign selling, because the stock breaks after 130, so probably foreign selling there, but it's come down to 176 now. Sun Pharma was down about 1.25% as well. Look at the broader market losers. Jubilant Food, 7% lower. We'll tell you why in a bit. BHL was down 9.5%. Tata Global Beverages was down 10%, ended about 7% in the red. There was BEML, IRB, IDBI, Adani Power and CG Power. CG Power essentially deferred the results date. Stock ended down 14% lower. Take a look at the broader gains. DHFL, again, I would call at this stage it bounce, but is up 20% from the lows, from 100 to 120. SRF was up 3, Petronet was up 5, Shriram Transport, Praj and Piramal Enterprise also was a gainer today. Lata.
Okay. Well, there are short covering bounces, but there is no taking away from the fact that the broader market is hurting rather badly. But the Nifty is still giving you gains. So let's straight away get to our guests and ask them what's their view of the markets. Smitesh, you first. First, the Nifty view and maybe even a bank Nifty view, since that was the outperforming index today.
Good evening, Lata. I think we now have well-documented boundaries on the indices. The Nifty 10,970, 980 on the upside. It needs to close above that to give some kind of a breakout. Or conversely, I think break below the 10,660, 675 zone. Having said that, I think it does look like that we might be in this range-bound market for a few more days. The indicators are still flat, but I think we are close to the upper end of the range. In case we break out, then I think we could have a 200 to 250 point kind of a continuation rally on the upside. The Bank Nifty similarly is now showing signs of settling between 27,750 to about 26,600. And once again, I think it will be more of a stock-specific market. I think also is the fact that the breadth is not very supporting. The mid-cap stocks or indices are going through correction, and it's only about the narrow part of the Nifty which you are highlighting. About 60-65% of the Nifty still looks strong to me. So maybe the index might still consolidate, but you might have some more correction in the broader market before we eventually break out.
All right.
Okay, that sets us up for the next story then, the second headline. IT big tech Mahindra ended the day in the green ahead of its third quarter numbers. The numbers which came in right after market hours were a big beat on revenue, margins and profits across the board. Reema Tendulkar is here with the big key highlights. Reema, over to you.
It's a solid set of earnings from Tech Mahindra, a big beat on revenues, margins and on the profitability fronts. On the top line, they've delivered a 3.5% dollar revenue growth, a constant currency growth of 4.3%, which means superior to what Infi delivered, TCS as well as Wipro. It falls short of HCL Technology, but HCL Technology had an inorganic contribution to the top line. Margins too have come in better than street expectations, an expansion of 80 basis points to 16.1%, and that is driving a beat on the bottom line. So profits at 1,200 crore are also looking better than what the street was anticipating.
Reema, thank you very much for that. We've got a question coming in. Sanjay from Punjab has written in with a question on Tech Mahindra. He's been holding 400 shares of Tech Mahindra. His cost is 477 rupees. And he basically wants to know what to do. 477, the stock's at about 760 right now. So he's in the money and doing decently well. Mayuresh, what would you tell him?
Evening, Prashant. No, clearly hold on. I think very good set of numbers that they've posted today. And again, I think the environment probably looks quite reasonable for them going ahead as well. Communications expected to do well, that contributes 45% odd. The enterprise business is expected to bounce back as well. And when you're probably talking about the overall EBIT and EBIT margin performance, it should stabilize because they've got a lot of triggers in front of them. What happens with 5G on the communication side will be a key trigger in terms of their order book burgeoning, and also I think the earnings accretion happening on that count. So yes, I think a clear hold from my side with a long-term perspective.
Yeah, I guess the constant currency growth is extremely impressive. And, you know, they have headroom for margin improvement. Hopefully when 5G telecom comes in, as Reema was saying, that's when maybe they will be able to launch even higher. Well, with that, we come to the third headline. Banks led the charge on the street today. Nifty Bank ended in the green, led by IndusInd, SBI and PNB. PNB, of course, was in the news because it posted a good set of numbers and particularly celebratory because it returned to the black after 3 quarters of losses. Abhishek Kothari here with the key highlights. Abhishek.
Punjab National Bank reported a profit for the first time in last 4 quarters as gross slippages of the bank declined 50% on a quarter-on-quarter basis. So if you look at the gross slippages of 3,900 crores, the fresh slippages were at 3,300 crores, which is perhaps the best or the lowest in last 4 quarters. So in absolute value, the gross NPA declined by 4.3% quarter-on-quarter, given the fact that they had a strong recovery and upgrade in this quarter. The gross NPA ratio fell down to 16.3% versus 17.2% quarter-on-quarter, and this 16.3% is perhaps the best in last 4 quarters. X of Nirav Modi provisions, the provisions for NPA were at 546 crore, in which they had an IL&FS provision of close to 330 crore. The negative worry was the loan growth, which was at 10-quarter low at close to -4% or a decline of 4% on a YY basis. However, the net interest income was ahead of our estimate at 4,290 crore versus our poll of 4,132 crore, while the bank reported a profit of 246 crore versus our poll of a loss of more than 1,050 crore. Back to you.
For that. Actually, in tough times, it's okay if banks don't grow their loan book, isn't it?
Yeah, absolutely. We got a question as well, Lata. Srinath Reddy from Kerala has written in with a question on Punjab National Bank. He's been holding 2,000 shares of the bank. His cost is 85 rupees a piece. He's a long-term investor, wants to know if he should hold or sell here. Again, Mayuresh, I mean, a fundamental view first. Stock's at 73 right now.
So again, as Abhishek was mentioning, I think a very good set of numbers again posted by PNB. Slippages at a 4-quarter low. You're probably looking at GNPAs also coming off. And when you're looking at the provisioning that they've done specifically with relation to the infrastructure account, I think the shoring up of their PCR, whether it's for the standard asset cases or the other cases related to NCLT, I think that itself is giving an encouraging trend, along with the recoveries and upgrades that the management has in their mindset going forward as well. So I think the worst is probably over, in my opinion. The price that he's bought a little bit higher, but if he has the patience, hold on to the stock.
Okay, I don't think the charts are looking very encouraging, or am I wrong, Mitesh?
So Lata, I think the stock has already corrected from 200 to about 70 odd levels. And if you look at the last about 12 years or 13 years of history, the stock on a monthly closing has taken support around the 65 to 60 zone. So in that sense, we are not at we're not in a bad situation. The only thing is that it might take time to reverse on the upside. So my idea would be, in case it comes down to about 65, add more, get your average price down, hold it down. I think even if you get a medium-term reversal on the chart or a stronger bounce back, I think you will see the stock get past to about 80, 85 levels, which could be a good exit opportunity. I don't think this is a long-term outperformance, but yeah, now that we are at long-term supports, we have seen the stock come to about 1/3 of its value from its last year's high. I think time to have some more patience, add it more on bad days around 65.
Okay. No, take Mayuresh's point as well, that I think it's put behind some very tough quarters, and now perhaps it's time to reap the benefit of all that hard work, that provisioning that has been done, and they're expecting some very strong recovery. The management was extremely confident that they will do some very good recoveries in this quarter. With that, we move to the next stock. That's Dr. Reddy's. That was up more than 3% in trade today after a court in the United States lifted a permanent injunction from selling a drug called Suboxone, which is used to treat opioid addiction. It's basically opium addiction. The global pharma major Invidor had filed a case because that is the company that owns the patent. And even though the permanent injunction has been lifted, Dr. Reddy's cannot relaunch the drug until the court hears this appeal against this decision. The appeal was heard, and they don't, the company Invidor, their position was not upheld by the court. So that's the positive for Dr. Reddy's. They can go ahead and launch Suboxone.
Absolutely. So that is DRL in focus. We are going to take a very quick break at this point, but we will leave you with some market opinion that we got earlier. Sridhar Shivaraman of Enam Holdings Things essentially talks about the banking space and the auto sector and what they are likely to do in the months to come. Listen in. We are back very quickly.
Given the fact that we take slightly longer term view on most stocks that we look at, so it's possible that there could be some more pain because of the change in regulation, as I mentioned, the insurance cost and many of the other issues that have come through on this. But we do believe that over a period of time, they will come back to their mid-teens growth, maybe in a year's time or so. On the whole, we think the risk reward is better. It's not like they are screaming buys, but at least they are far better than where they were, where we were giving them consumer valuations, say about 6 months back. Now they are more like discretionary valuations. We've been bullish on this for over a year now, and have to admit that it's become a crowded space. When we started, we were sort of the loners in this space. And one of the theses was also the way IBC would play out. Have to admit that IBC hasn't played out the way we thought. But maybe a new regulation, it always takes time before these things stabilize. So we are still bullish on this sector. Keep in mind that credit costs are still in the range of 2.5–3%, even for some of the private sector banks. This has to normalize, and it comes closer to, say, 70 to 100 basis points over a period of time, maybe a year or 18 months. These numbers will start looking very different. The ROEs will start looking much better than what they are today. So I think there is still room for re-rating.
Midcaps got pummeled in trade today yet again, ending the day almost 1% in the red. Among the big stocks and better stocks that led the losses was Jubilant Food, after sources suggested that the company is considering royalty payment to its promoter group for using the word jubilant. Remember, the stock was already under selling pressure on account of alleged profiteering. Under GST, they faced a fine of 41 crore rupees. Prashant, you were the one who scooped this royalty story for us. What were the details?
So, I mean, this is completely source-based, and what we are given to understand is that the promoters want royalty to be paid by Jubilant Foodworks to them for using the word, for using the brand Jubilant, by Jubilant Foodworks. So, what we understand is that the amount which is under discussion is 0.5% of net sales. I mean, if you look at 518 net sales and you apply that 0.5% number, it works out to 15 crores or so. But the amount is not the issue. The issue, and I think the reason markets reacted the way they did is the precedents that it would set. And also, I mean, I think markets were scratching the collective head and wonder, well, what is this royalty really about? Because remember, Jubilant Foodworks already pays almost around 3.3% every year of net sales to Domino's as franchise fee for using the Domino's. And Domino's is the brand which we all know and use, and I mean, I think everyone knows, the consumer knows. So why would Jubilant Foodworks consider paying promoters to use, promoters of Jubilant Foodworks who own 45% stake in the company, a royalty of any sort for using Jubilant as a brand? So I think that was essentially the issue here. We wrote to the company, we not heard back from them, but the promoter group got back, Jubilant Bharatiya got back to us, essentially saying that they have no comment to offer at this point in time. The bigger thing is, if this goes any further, what we have to understand is whether shareholder approval will be required for something like this, whether the majority or the minority shareholders will have to say yes for this to be taken up. Some experts that we spoke with said, well, this is material enough and this should be put forth in front of shareholders. Others said it does not meet the SEBI requirement because the norms stipulate that only any corporate action which results in a revenue impact of more than 10% of sales. I mean, that needs to be put forth, and that's material. That's the definition of material. But in any case, I mean, I think it's up for debate, and we'll hear more on the matter in the days to come.
Oh, yes, absolutely. People will wonder if they sold pizzas as Jubilant pizzas, would they sell? Or for that matter, anything, donuts or anything else that they intend to sell. But yes, promoters wanting a share of the pie, and corporate governance issues took that stock down about 6 to 7%. We have a question from T.S. Karthik. He tweets that he wants to know the right time to buy this stock. If it is a shorter term, then first from you, Mitesh. Time-wise, is it dipped enough to be bought?
See, I think from about 1170 to about 1350, managed to break out yesterday, close above that, but I think today with the bad news has come back into the range. So I think if it's a short-term trade, 1170, 1180 remains your best entry point. In fact, today's intraday low was 1205. But I think assuming that the range remains, I think 1170, 1180 should be a buying zone with a 20-point stop, and on the upside 1300, 1350 should be your exiting zone.
Okay. Well, fundamentally, Mayuresh?
No, as you and Prashant were discussing, I think obviously this puts an overhang on the stock. Nothing materially wrong with the numbers that they posted. SSG growth was good, margins were good. They probably had Dunkin' Donuts breaking even in this quarter itself. And again, I think the online contribution in terms of online ordering is quite significant, which also abets their EBITDA margins. But I think valuations is something that is on the elevated and higher side. So I will wait for a significant decline to get this news cleared over the next few days or weeks, and then probably take a call. At this point of time, I think I'm better off with the private bank, something like a Federal Bank, or even something like an ICICI Bank on declines.
Okay, we move on to the last story, the big headline, the last headline of the day's earnings reactions. They poured in. ACC ended the day over 1% in the red after the company announced its December results. Profits at 230 crores were below street expectations, although margins beat estimates, and so did revenues coming in. They're 11% higher on a year-on-year basis. That number was 3,800 odd crores or so. We also had Tata Global Beverages, which ended the day almost 7% in the red, was down a lot more at one point after the company reported a cold brew for the third quarter. Profits dipped 40% year-on-year, coming in close to 100 odd crores. EBITDA and margins too were weak. Actually, let's dive a little deeper into the Tata Global numbers. Huge volumes today as well. Mangalam is standing by with just that analysis. Mangalam.
Well, for Tata Global Beverages, weakness continues. In fact, this quarter as well, the street wasn't expecting much. The company disappointed on muted expectations as well. EBITDA declined by 16.5%, and on the back of that, we saw a net profit decline of nearly 35%. So if you take a look at all the numbers for Tata Global Beverages, the revenues, they grew at about 10.5%. The street was working with a number of around 7 to 8%. So that may go down as a mild positive. However, what news is mild positive if the EBITDA actually declines by 16.5%. We saw a margin decline of nearly 330 basis points and a net profit decline of 35%. It's been many quarters since Tata Global Beverages has surprised on the upside. Another negative was the finance costs going higher by about close to around 30-40%. 8.5 crores turned into 12.95 crores in terms of quarterly finance costs as well. Remember, over the last many quarters, many years, the company has reduced its long-term debt. So in light of that, increased finance costs is perhaps something that the street may not like. Both of their segments, be it the tea business or the coffee business, saw a decline in their operational profits to the tune of 13 or even 30%, reducing the margins. The company has been taking a lot of initiatives to restructure operations and perhaps make some cost-cutting amendments. However, in light of lower commodity prices and weak macros in their commodity part of the business, all of that is not doing too well. The stock lower yet again.
All right, point taken. Tata Global has not been very profitable brew for investors. Jitendra Kapoor from Delhi has written with a question. Has 300 shares of the company purchased at 274 rupees. Says he's a long-term investor. Mayuresh, should he stay with Tata Global Beverages? He's making quite a loss, almost 90 rupees per stock. No, we can't hear you, Mayuresh. Okay. Yeah. Mayuresh?
Yeah, sorry. So I think it was a disappointing performance on the operating front. Ultimately, it's a commoditized business, whether it's tea or coffee. So what they probably do in terms of tea prices or coffee prices as the crushing season starts and as the new season begins in May is going to be interesting. Their packaged business, specifically I think the mineral water business, how that shapes up is also going to be important, as well as the associations that they probably have. So again, I think the long-term outlook probably can improve for Tata Global over a period of time. So if he has the patience, he can hold on. I think Mitesh can be a better judge at what levels he can probably dip into average the stock.
Hey, Mitesh, he says he's long-term but has lost quite a bit.
So actually, yes, Lata, the stock actually went to 300 after that big breakout a couple of years back when it managed to get past this 165, 175 zone. It's back to those levels. So my sense is that the stock might hold on over here around 165 if it holds, and then you get a signal reversal. You might see the stock possibly try and climb back to about levels of 220, 215 odd zones. I'm not sure of a level beyond that. So maybe he'll get a better exit if he holds on. He can even add more with a stop below 160 on at least the fresh position. And then he will get his average price down and try to exit around 220 levels.
All right. Thank you very much. We are out of time, Mitesh and Mayuresh, for joining us and taking us through all these viewer queries. But before you go, there's something more from Anisha.
Absolutely. I mean, there were lots of other stocks and groups of stocks which were in focus. Anisha standing by with a compilation of all of that. Anisha, over to you.
Well, BHL took a knock of around 10 to 12% after the margins disappointed, and that's the reason the profit came at 190 crores versus 260 crore expected. Suzlon at one point of time was down about 40% after some rumors and allegations regarding debt servicing and pledge share came forward, but the management clarified to the channel that they have been servicing debt as usual and no pledge shares have been invoked. Anil Ambani group of stocks continue to be in focus. Reliance Naval, of course, came out with a disappointing set, and Reliance Communication has been thrown out of the F&O system, but Reliance Power as well was another stock which was down about 30% in trade at one point of time. CG Power took a sudden knock of 10 to 12% as the board meet for assessment of Q3 numbers has been pushed to 12th February, and now the board is saying that they're going to consider another business matter, and that is what has the street nervous. IRB Infrastructure, well, the EBITDA margins are lower than expected, as well as Citi has cut the target now to 140 versus over 180 earlier. Shrey Infrastructure, not only the Q3 numbers were disappointing, they say that they will continue to be cautious on disbursements in Q4, and that's the reason the stock was down 10 to 12%. Back to you.
Anisha, thank you very much for that wrap out of all the stocks which mattered in trade. Well, it's a wrap on this edition of Markets Today. Talk back from Lata, me, everyone on the team. Thank you very much for staying with us. There is a lot more coming up on the other side.